It is a tale of two metals today. Uranium, which has blown through $100 at $106 a pound here, and nickel, which seems to have all the headlines here. Mines are closing what seems like left, right, and center here, as you'll hear in our many news stories on nickel. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and it continues to be interesting here with this crash in nickel prices, as they're calling it. I don't see it as a crash. I mean, we're at $7.16 a pound here, 20 cents down from last week. But if we look back a year, we are down 40%. And if we look back to February of 2022, when the London Metal Exchange was broken basically by the nickel contract, I think it was up to $22. And again, now we're at $7. Let me check my notes here for a second. Yes, we went all the way up on the weekly prices that we informally tabulate here, $21.87. So that was, of course, right after Russia invaded Ukraine. And so it is quite a fall. I mean, we're down 66% basically in the last year and 11 months. Let's call it 2 years. So a tricky trade, and we're getting stories here, and we're going to look at them today. BHP flags possible write-downs, Australia's Wyloo shuttering a nickel mine, and a couple of other stories here just on the nickel market itself. I mean, it's only been a week since we last talked, and all of this seems to be happening at once here. So a lot of drama in the nickel market, again, this time on the downside. And contrasting it with uranium here, to me, it just shows how difficult it is to invest in commodities, particularly the metals. I mean, anybody, I would argue, that you talk to who has invested in the metals in the last 20 years has to tell you it is not easy. When it works spectacularly. It's like crypto. It goes up 10x, 5x, 3x. You're in the hundreds of percents. So that is always the lure of investing in metals and miners, which, again, it's a very cyclical industry. Right? You know, there was uranium. I think that went from, if I remember correctly, from $7 to $117 or whatever it was, in the first bull market, then getting completely depressed, bombed out, so to speak, going down again, maybe $20, $15 a pound. And here we are at $106 a pound for uranium. But ask any uranium investor if there are any left that stayed in the trade, and you're not going to hear that it was easy. I mean, if you came in the last 3 years, you got lucky. But, I mean, from a fundamentals perspective, we've been hearing since Fukushima, and even before Fukushima, that, uranium, there's not enough. And you would have had to have waited a decade. Now, what's interesting, had you waited a decade, it's interesting to see how the price performance would be, versus, for example, the S&P 500. Because in some of these stocks, you probably would have, 5 or 6x'd, maybe more, 10x, 20x, depending how far you went on the risk curve. So to me, it's just an illustration of how hard this trade is. And I think we see the same thing in nickel, right? I mean, nickel, 2 years ago, we're not going to have enough nickel. We were listening to Robert Friedland in London in November saying, car companies are calling him and they're asking about their electric vehicle batteries and where the nickel is going to come from. And his answer is, it doesn't exist. So again, to somewhat invert the argument, maybe that's the opportunity in nickel right now. Again, not financial advice. I mean, who wants to give financial advice on this incredibly difficult sector here? But again, nickel at $7.17. I mean, look at lithium. Here we are, down again. A new low here on, again, our informal weekly readings here at $13.27 per kilogram, down 4 cents. So another very difficult trade. Cobalt, $13.22. So our battery metals here, our much celebrated battery metals, not exactly doing what they were supposed to do. Like even silver, you could argue. I mean, we've been hearing for how long that there is not enough silver. Silver is at $22.48. Like, we haven't even broken 25, and frankly, we're not even close to breaking 25. And gold, still remains above 2,000. Like, what happened to silver? I thought this was like, a massive trade that was supposed to happen here. And if we zoom out, it probably is. One could argue maybe all of these metals we return here in a year, it may be a completely different story. So that being said, investing in the fundamentals in the metals is a very treacherous game. To state the obvious here, as we begin our show here on January 23rd, pontificating on the situation here from an investment point of view. And there are so many interesting ways of looking at this industry. What's really fun about this episode is we have Paul from the Sirius Report, and we're going to get the 30,000-foot view of what's going on geopolitically. And what I was particularly happy with in this conversation is I get Paul to ground the conversation in resources at every turn. So it is quite interesting, and I felt like the conversation itself actually led to insights that, at least for me, I had never had before, such as this idea that, maybe France is going through a similar situation as Germany, in the sense that their price of uranium, 62% of France's energy comes from nuclear. And look at what's happening to the price of uranium. And don't forget what happened in Niger, which arguably, with Arriva, the French nuclear energy company in there, getting kicked out, as far as I understand, out of Niger after the coup, that was their golden goose, one could argue. So you zoom out, and I had never thought about this from the French point of view. Again, we hear a lot about Germany's economy and how much it is suffering from the lack of cheap Russian energy, right? I mean, we hear a lot about this, the deindustrialization of Germany. But with uranium up above $106 here, with Niger off the table, as far as the French are concerned, with 62.6% of their energy coming from nuclear, where does that leave France? Are they really in such a different situation? Perhaps they have stockpiles, but as long as this price stays high, I mean, are they looking at a tripling of their energy costs as well? Back of the envelope calculation here. Are they looking at their energy costs multiplying? And I have heard, little kind of comments that the French economy is not doing that well. They've been shuffling some people around there in the cabinet, from my understanding. So, interesting situation here, a fascinating big picture discussion. I kept Paul down to just an hour, which is a record here. Usually it's like an hour and a half to 2. For Paul and I being in discussion, it is a very concise discussion. We cover most of the world. Again, one of my main goals here, if not the top goal, is to give perspective. Otherwise, what is the point, really, of listening to a podcast? I am here to help give you perspective. Here are some stories you've never heard. Maybe you walk away from here a little richer in your understanding of what may or may not be going on. And one of the hardest parts of getting perspective is knowing where to start. And I thought where Paul started was very interesting, which was Ukraine, interestingly. So a fascinating discussion. The Middle East comes up, the Red Sea, Africa, Sahel, and more. So a wonderful episode for you today. And coming up on this week's CEO Spotlight, we have FM Global's Michael Beaumont, who talks about the risks that are inherent in mine sites and really what mining companies can do to address risk. And it's quite a fascinating, illuminating discussion there as well. All sorts of things that I never would have thought about come up, including how, fires are one of the most common sources of damage at a mine site. And, fire isn't the first thing I think about when I'm at a mine, so very interesting discussion, also heavy equipment and more. So that is coming up right away. So thank you once again for joining us. We have a great show and a whole bunch of very interesting news stories, including what's going on in the nickel market, hot off the press. So if you want to find us online, you can find us at northernminer.com. You can find us on Twitter at Northern Miner and on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host this podcast and wherever podcasts are available, including Spotify, Stitcher, Apple Podcasts, and SoundCloud. And with that, let's turn to FM Global's Michael Beaumont for this week's CEO Spotlight. Joining us today for this week's CEO Spotlight, I'm very happy to welcome Michael Beaumont, Operations Vice President and Group Manager of Account Engineering at FM Global Australia and New Zealand. Michael, welcome to the show.
Thanks, Adrian. It's great to be here.
Well, it's great to have you. For those that have never heard of FM Global, could you describe what FM Global is and what it does?
Yeah, so FM Global is a specialty property insurer. We participate in the mining market, but also other markets. We're about a 200-year-old company, and we base our model around a mutual model. So we're owned by our policyholders, and we work with our policyholders to try and help them prevent loss at the same time as providing the risk transfer options that insurance provides. And we do this with engineers. So we have a group of engineers who go out and visit about 60,000 sites a year, collecting data, looking for ways to improve risk management practices. And in the mining space, we probably have close to 100 around the world that do that. And they're mostly in Australia and Canada. And they go and have specialty training, experience, knowledge in the industry, basically take our understanding through loss history and research and industry best practice and try and find the best possible risk management outcomes for our clients. They're a group of highly trained engineers in the various occupancies that they work in, and we collect a lot of loss information through the years as well. We also have a very large research body, research scientists, and a very large test facility in Rhode Island where we actually burn things and find out a lot of information about how things respond to various fire situations, equipment breakdown situations. Recently, in the last couple of years, we did some research on conveyors, and we built a full-scale conveyor system in our research center and started setting rubber belts alight to find out how to protect the belt the best with the fire systems.
So, what are the main leading losses that are occurring in mining?
You look at the top thing is we've got about 23% in that pure equipment breakdown, whether it's your electrical system failing or your mechanical breakdown, gear failure, motor failure. Then you have fire. And then we have one that's trended constantly, which is collapse, which I'd actually would put with equipment breakdown because it usually is something like the collapse of a large piece of balance equipment like a stacker or a claimer or a ship loader or something like that. But the failures are really equipment breakdown. You're not maintaining a good structural integrity program and things like that.
Okay, excellent. And I have to say, I'm a little surprised that that is insured in a sense. I would expect that, in my sort of layman's view of things here, I would have thought, oh, well, if a big heavy equipment breaks down at a mining site, I would have to deal with that. But in fact, oftentimes these are insured, is what you're saying.
Yeah, the insurance policy is going to cover any of these machinery breakdown, the fire issues, and that's where that policy we have with the client indemnify them for loss, and it's part of their risk management process to decide what their appetite is and how much they need to transfer to another company like us as an insurance company. The interesting thing is, and we usually use like a tip of an iceberg thing, and that's the side of loss that isn't insured. And for miners, it's significant. So if you have a large fire, we'll pay for the conveyor system, we'll pay for the business interruption over the time period of rebuilding, but we can't recover market price. We can't indemnify them for reputation damage. There's so many other aspects in the value chain in mining that are impacted by big shock losses. Just no miner would really want to have them, and those aren't insurable. And there is some really interesting research, tying good risk management practices back to things like market value and share price volatility.
Well, I was just thinking to myself, if you could insure the share price, Michael, what a business that would be. So fascinating. I have to say, one of the big surprises as I looked over doing research on your company, I was quite surprised to see that fires were one of the biggest causes of losses for miners.
It's as a segment, probably the largest segment of losses is equipment breakdown. If you group together all the things that break down, but that's divided into mechanical and electrical. As a standalone category, far is about 21% of our loss history as we look at it over a 20-year period. I've also done that cut over a 5-year period, and I look at this pretty much every year just to see what trends are there. And since I've been involved with the mining industry with FM for about 25 years, it's always been that 20 to 25%. If I look at the last 5 years, though, we're actually seeing an uptick in fire losses and is probably about 27% of our gross loss dollars paid out to fires in the mining space.
It's kind of counterintuitive then, considering that, oftentimes we're dealing with a bunch of rocks. Tell us, like, how can that be?
Well, when you look around, it does seem counterintuitive because, for the most part, other than coal, you're looking at a non combustible product. You're looking at a lot of steel structures, a lot of metal, and a lot of heavy equipment. But when you start looking at that equipment and you start thinking about what you're doing in a comminution circuit, your sizing equipment needs to be made as largely made out of polyurethane. A lot of the sizing screens, the conveyor belts are 50 millimeters thick and they're solid rubber and they run for many, many meters and they burn extremely well. And then you've got things like linings on mills, and you can have a situation where you're just doing some maintenance one day. Someone gets in there with an oxy torch and a hot bolt lands in your sag mill, and that fire, it can be absolutely devastating. And these losses tend to attract some property damage. Obviously, you're damaging the equipment, but it's the impact of the business interruption that really makes the fire losses big because they tend to be very large. You're going to be recovering from them, maybe 2 weeks, maybe 2 months, or even longer to recover from these fires.
So, where is the money being lost?
The biggest causes of the losses, and that's not just fire. When we look at our loss history, we start breaking down the causes. We get to things like electrical arcs, corrosion. Equipment breakdown is essentially something that really drives this. So whether you're looking at an equipment breakdown like a gear failure on a large mill, or equipment breakdown could be just a seized bearing on a conveyor that then causes a fire. The equipment breakdown, this is something that most miners are very aware of, is what's really driving the losses. We do see a large incidence of hot work, managing the use of oxy torches, welding around this equipment, a real need for awareness of where there can be combustible material where you're not expecting it, lined equipment and conveyor belts that are maybe many, many meters below where you're doing the work and things like that.
Okay, very, very interesting. So, what can mining companies do to be more resilient and prevent these losses from occurring?
Well, it comes down to the good risk management practice. And when we go with our clients and our engineers go out on site, they're looking at things from a systems approach. They're understanding that and working with the miners to find these areas where they can have a breakdown in process in the risk management side. And when we're looking at equipment, we look at a number of about 7 categories: maintenance, operating conditions, environment, the working environment, the operators, their training, the age and history of the equipment, the safety devices that are in play, and the contingency planning. And when we look through, and there's a lot of questions that go behind that, but if people pay attention to those 7 things and really honestly assess how well they're doing in them, we find that that really can drive good risk management practice.
Just as we close here, what would you like people to know? Maybe there's miners. We have a lot of exploration companies as well as executives from larger mining companies listen. You're from the engineering side of the business. So, what would you like them to know as just some final thoughts here that maybe we haven't discussed yet?
Well, our company operates on a principle of we believe that the majority of all loss is preventable. So, whilst we get to witness all this loss history and respond to it, most of these things can be stopped or mitigated. through contingency planning, through sparing, things like that. I would say that, no matter what the challenges are in your operation, if you apply good risk management processes, you can get to a better place and you can avoid these losses. We actually harness a lot of this data. We've been using a lot of predictive analytic models with our own clients and being able to focus their efforts. So my message would really be, pay attention to the good risk management processes because it's going to pay off. And anybody who's had a large loss in any industry, but mining especially, knows that they never want to go through a second one.
Great words to leave on. Michael Beaumont, Operations Vice President and Group Manager of Account Engineering at FM Global Australia and New Zealand. Thank you for joining us on this week's CEO Spotlight.
Thanks, Adrian.
And thank you once again to FM Global for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, nickel price crash seen extending Indonesia's grip on supply. This is Bloomberg News via mining.com. A prolonged slump in nickel prices is stress testing producers worldwide, raising the prospect of sweeping mine closures that will deepen Indonesia's dominance of global supply. The metal used in stainless steel and electric vehicle batteries is down more than 40% from a year ago amid a growing global glut. That's piling pressure on higher cost operations and could pose the greatest risk to new projects outside Indonesia. So far, the main casualties are in Australia. On Monday, billionaire Andrew Forrest nickel producer Wyloo Metals said it's shutting down mines, and BHP Group said it's partly closing a processing plant. BHP has warned last week on prospects for its nickel business, while First Quantum Minerals suspended a mine. So that is 3 mines. But production in Indonesia, which already accounts for half of global supply, may prove more resistant to output cuts. The Southeast Asian nation has emerged as a global nickel hub after billions of dollars of investment in efficient plants that benefits from inexpensive labor, cheap power, and readily available raw materials. And we have a quote from Alan Ray Restoro, analyst at Bloomberg NEF. Quote, Indonesian projects are more flexible in absorbing the impacts of lower nickel prices. End quote. That means overall global supply will keep rising despite output curbs elsewhere. He said, I started this show out comparing nickel and uranium, of all metals, but it's quite similar when you think of what they're saying here, that we're still going to have a glut because Indonesia is going to keep producing. I mean, for the uranium investors out there, doesn't that remind you of Kazakhstan after the bursting of the first uranium bubble in that bull market 15 years ago? Kazakhstan was oversupplying the market. Now it's Indonesia. Another take on this is, are we going to have to wait 10 years for nickel to really go somewhere? The fundamentals would say unlikely, but I think that's what the fundamentals were saying with uranium 10 years ago. So the flood of new supply from Indonesia in the past 2 years has overwhelmed demand at a time when metals markets are under pressure from a sputtering global economy. For nickel, softer demand growth from the EV sector is also a headwind, and prices have recently traded near $16,000 a ton, close to their lowest level since 2021. Malay Resources' Ave Buri mine in Tasmania and a project by IGO are also at risk, according to Bloomberg NEF. Calls to the two firms were not immediately answered. Parts of BHP's Kambalda concentrator will be suspended from June because they can no longer receive ore supply from Wyloo's halted mines, BHP said. So those two stories are actually interlinked. The world's biggest miner is reviewing its Nickel West business, referring to BHP, and last week warned it may be forced to write down the value of the assets. First Quantum said it would suspend its Ravensthorpe nickel facility in Western Australia and cut a third of its workforce. And again, let's not forget, it is not easy to get mining talent these days, so that is no small matter. Citigroup sees nickel falling to $15,500 a ton. Right now, again, it's around $16,000. And so Citigroup sees this happening in the next 3 months. The bank recently slashed its forecast for average prices this quarter to $16,000 a ton from $18,000 a ton. To be sure, Indonesia has its own uncertainties. A December accident that killed 21 people has triggered calls in the country for tighter regulation of the nickel industry ahead of a presidential election next month. One of the 3 candidates to become vice president criticized how the incumbent government has managed the sector during a televised debate on Sunday. The announcements by BHP and First Quantum add to other signs of stress. Glencore said in September that it will only keep funding the struggling Kanyambo nickel mine until next month. Nickel plants in the French territory of New Caledonia are seen at risk of closure, the French government said last year. And here's a quote from Nikhil Shah, principal analyst for base metals at CRU Group. Quote, "A lot of supply is still coming from Indonesia, and we will need nickel prices to go lower to constrain supply growth in Indonesia." So really saying the way we're going to reduce supply growth in Indonesia, again, this glut out of Indonesia, is with lower nickel prices. And finally here, nickel's woes reflect the dynamics of other battery materials markets, which have seen prices sink after surprisingly strong growth in supply. Demand for nickel and cobalt have suffered too as EV makers adopt types of batteries that don't use either of them. So a lot is going on here. You know, I think one of the culprits that is not being discussed here is the very expensive prices that are on new cars right now, which I think is leading to people not buying as many cars, especially the expensive EV cars. And therefore, there's also, I think, you hear about how there are a lot of electric cars on the lots. To me, that's anecdotal. I haven't seen it for myself. I haven't seen the numbers, but you do hear of that. So it does make you wonder how much the car industry is involved. And again, they're talking about different kinds of batteries that don't even use nickel or cobalt. So all sorts of interesting developments here. According to Jason Sapor, senior analyst at S&P Global Commodity Insights, quote, "We expect nickel prices to remain subdued this year." So a lot of people were expecting a, metals bull market in 2024, not according to S&P Global Commodity Insights. Now, let's take a look at this next story here. A column from Reuters on mining.com. Surging exchange stocks pile the pressure on nickel. So let's look now from the other perspective, not the producer, but the holder of the inventory here with the LME. Nickel was the worst performer among the London Metal Exchange's base metals last year by some margin as the market priced in a wave of new Indonesian supply. This is just like the Kazakhstan story, I feel, 12 years ago or whenever that was with the uranium market. Indonesia's mine production rose by 29% year on year in the first 10 months of 2023, according to the International Nickel Study Group. Nickel demand is rising fast thanks to its use in electric vehicle batteries, but nowhere near the pace of supply growth. Until recently, the growing supply surplus was confined to intermediate products such as ferronickel and matte, rather than high-purity refined metal that trades on the LME and the Shanghai Futures Exchange. That is changing as stocks rise on both exchanges, narrowing the pricing gap between refined metal and other forms of nickel. So there were actually low LME stocks of nickel last year until the fourth quarter, when LME registered inventory had grown rapidly from 37,000 tons to 69,000 tons. So the inventory on the LME almost doubled in the fourth quarter of last year based on Indonesia's rapid expansion, based on Indonesia's exports. A significant driver of that has been the amount of Russian metal arriving in the LME system. So this is another, interesting aspect of this story. Warranted stocks of Russian nickel increased from 7,000 tons at the end of August to 17,000 tons at the end of December, likely reflecting a combination of weaker demand and self-sanctioning by Western users. Right, and this is another item we were commenting on last week, which was this rising share of the metal at the LME being of Russian origin. Again, if you're a Western manufacturer and you have the choice between Russian and non-Russian, you'll probably, especially if you're in England where you're not even allowed to buy Russian metal, why would you buy the Russian metal if it's the same price? And just one last point on this nickel story, but the real game changer is the rising tonnage of Chinese metal in the LME storage system. There was no warranted Chinese branded nickel at all as recently as August. By the end of December, there were 6,500 tons. That's down to the Chinese build-out of capacity to convert Indonesia's stream of intermediate products into refined metal that is LME deliverable. Macquarie Bank estimates that 250,000 tons of annual conversion capacity will be online by the end of this year. You know what it shows when you take a step back from this market story of the last year? It shows that if China needs the nickel, they can get it. That's what it shows me. It shows that, hey, we can make so much of this stuff, we can turn this into a glut. Now, let's not forget, as we've observed many times, as many of you know, the Chinese playbook as well. I mean, what did they do with rare earths? They oversupplied the market, and what happened? The Western mines of rare earths, 15, 20 years ago, shut down. Is the same thing happening now? I don't know. But if you abstract what is happening, which is larger Chinese sourced supply and Western mines shutting down, again, we are seeing a not dissimilar story, worth noting. And finally, it's not only the LME that has seen more Chinese metal turn up. Shanghai Futures Exchange inventory, which is highly dependent on Chinese nickel brands, hit a multi-year low of only 560 tons at the end of May 2023. Stocks have since mushroomed to 14,000 tons. So it was only 560 tons in May of last year. And now it is almost, 25 times the amount on the exchange. So they hit quite a low of 560 tons. Now they have 14,000 tons at the Shanghai Futures Exchange. So one would think this is good for inflation. A couple of quotes here from the operators, also known as the miners. Australia's Panoramic Resources went into voluntary administration in December. Its administration said on January 8th that operations at the Savannah Nickel Project would be suspended because, quote, the prospect of achieving a near-term turnaround of operations and finances is low, end quote. And we also mentioned First Quantum in the previous story, which is cutting jobs at Ravensthorpe mine in Australia because of, quote unquote, significant downturn in prices. And we have a quote from BHP's Jessica Farrell, who is president of the company's Nickel West division, who said, quote, we are working hard to remain globally competitive in a very tough operating environment. And finally here, the problem is that there is no sign of the Indonesian nickel juggernaut coming to a halt anytime soon. Indeed, Macquarie analysts note that, quote, surpluses remain our base forecast for the overall nickel market all the way out to 2027, most likely in all main product categories, end quote. As more of that surplus is transformed into refined metal, exchange stocks will rise further, piling even more pressure on the nickel price. So fascinating developments there out of, and we have like 3 other stories here, but they're basically, already been discussed. BHP flags possible write-downs at nickel unit. Australian tycoon Forest shuts nickel mines after price crash. Nickel prices keep slumping even as mines close, Bloomberg News. Quite something. Now, continuing on, just to wrap up here, it was almost all nickel, but just to see what else is going on here. A couple of headlines here. Serbia wants talks with Rio Tinto over Jadar lithium project, Reuters via mining.com. And of course, Belgrade revoked licenses for Rio's $2.4 billion Jadar lithium project in Western Serbia in January 2022 after massive environmental protests. Scrolling down a bit, the president said, quote, we are facing the question of whether the company will file a lawsuit against us or not. I asked them not to take measures to protect their interests. So isn't that interesting? Analogous to a certain degree to First Quantum in Panama. Also, just a headline here, Canada gives mineral-rich Arctic region of Nunavut control over its resources. Reuters via mining.com. Canada on Thursday formally gave the giant Arctic territory of Nunavut control over its reserves of gold, diamonds, iron, cobalt, and rare earth metals, a move that could boost exploration and development. So maybe this will help speed up the permitting process. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. And the U.S. 10-year bond is yielding 4.12%. That is 0.11% higher than last week. So bond yields continue to climb. Interestingly, the UK 10-year gilt is yielding 3.95%. That is 0.16% higher than last week. And the Italy 10-year bond is yielding 3.87%. That is 0.07% higher than last week. So bond yields rising. Turning to precious metals, gold is at $2,029.30 per ounce. That is $15 lower than last week, but still above $2,000, but just barely there. Silver is at $22.48 per ounce. That is 77 cents lower than last week. Platinum is at $894.18 per ounce. That is $19 lower than last week. And palladium is at $935.52 per ounce. That is $36 lower than last week. And right now, the spread between platinum at $894 and palladium at $935 is only $41, interestingly. Turning to our industrial metals, copper is trading at $3.75 per pound. That is 3 cents lower than last week. Iron ore is $2 lower at $135.42 per metric ton. Aluminum is also lower at 98 cents per pound. That is 2 cents lower than last week. Lead is at 95 cents per pound. That is a penny lower than last week. And nickel is at $7.17 per pound. That is 13 cents lower than last week. Tin is higher. We do have an anomaly here at $11.48 per pound. That is 31 cents higher than last week. Cobalt is unchanged at $13.22 per pound. Lithium is 4 cents lower at $13.27 per kilogram. Uranium, also an anomaly and big time here at $106 per pound, blasting through $100 here. And that is $13.50 higher than last week. And zinc is 4 cents lower at $1.12 per pound. Overall, metals lower, with very special exceptions being tin and especially uranium moving higher. And looking at, nickel and lithium as really quite low, cobalt as well at $13.22 per pound. And those are your metal prices. Coming up, I'm very pleased to welcome back to the show Paul from the Sirius Report to get a comprehensive 30,000-foot view on what is happening in the world. And what's beautiful about this conversation is I get Paul to contextualize that discussion within the resource conversation. So it is a fascinating, very useful, I would say, conversation in terms of helping bring perspective. Paul shows us how he is processing this information. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back Paul from the Sirius Report to the Northern Miner podcast. Paul, welcome to the show.
Well, thank you for having me on again, Adrian. It's always a pleasure. I think we have interesting discussion, and I think we have a bit of a kind of looser format, so it makes it more interesting for us as well, and I think it stimulates a better discussion in the process.
It is a pleasure and a delight to have you back, Paul. And I agree. I am for the living, breathing conversation here in this, very challenged world. I think people look at the news and there seems to be a fire in every direction here. So as someone that does look at the big picture of geopolitics and who has how long has your show been going, actually, Paul?
The podcast we started September 2016, and I did some bits with people, like some interviews, sort of 2015 onwards, middle of 2015 or so.
Okay, so about 8 or 9 years you've been following quite diligently the machinations, so to speak, of the world, bringing your perspective to it, a kind of comprehensive analysis of, I'd say, largely the strategy often that's involved in these kind of larger issues, or lack of strategy in many cases. So from your perspective then, as you look at this, arguably a confusing, world where, you could pick your battle
that you want to focus on. How are you making sense of this? What is your big picture view here? Like, what's kind of on your radar? How are you processing this information?
Yeah, generally it's trying to look at, I mean, yes, you're right. You have to sometimes drill into detail, but at times you have to step back and look at it. You know, I've used that 30,000 foot analogy, and I times did my podcast occasionally call them that, because you do need to have that perspective. I mean, in a broad sense, there's some very obvious things. I mean, we don't need to go into too much detail, but Ukraine still is a war. It's still ongoing. The Russians are continuing to make more and more territorial gains. The Ukrainians are running out of everything. And the most regrettable thing is running out of military personnel. I'm now to the point that they're not conscripting women, but they're trying to get women to join. They're trying to get Ukrainians back from countries like Poland and serve them mobilization papers. And they've got 50, 60-year-olds trying to fight a war they're not capable of fighting. And the West knows the reality of what the outcome's going to be, that Russia has already won the war. So they're trying to sell it as a strategic defeat, meaning, well, Russia didn't achieve its objectives, and they're not Russian objectives. They're the objectives the West is claiming Russia has, to try and sell to us that Russia's had a strategic defeat, meaning they've actually won the war, but we're going to try and sell it this way because we told you Russia would lose the war. And of course, that's clearly not the case. Now, I don't want to diminish that all loss of life is tragic, but I don't focus on, like some people do, well, today this happened and tomorrow that'll happen, because for me, it's pointless. The question now is, what is the future for Ukraine? I mean, and how much of Ukraine will end up being part of Russia? Is it going to also include Odessa and Nikolaev? So Russia basically controls the Black Sea. Will it include Kharkov? So there's this band that stretches all the way around from the north and the east to the south and the west. There's also the question that Russia basically said they don't have a problem with nations like Poland or Romania and Hungary wanting parts of Ukraine, which historically they believe should be part. So Lvov would be part of Poland. And they're going, well, Ukraine gets broken up into multiple pieces. We don't have a problem. If you want that, take it. And then there'd just be this rump state in the middle. I mean, Ukraine itself is economically finished, financially finished. It's in that respect, a third world nation. It's deeply corrupt, and the future of Zelensky is very uncertain now. And there's a lot of noises coming out where people are going, he's just an authoritarian dictator. I mean, some quite prominent people publicly have said this now. So it's still an ongoing problem, because the fallout will be enormously difficult for the United States and its allies to try and sell to the West, and increasingly in the West to understand the reality. So that's a sort of major sort of 30,000 foot view of that. And then we obviously have to come on to the whole question of Israel and Hamas. And we made the point at the outset that there was all this conspiracy nonsense, that somehow it was all engineered so the United States could go to war with Iran. And I said at the point, I'm sorry, it's absolute nonsense. And here we are 13, 14 weeks. 15 weeks later, it is nonsense. The US does not want to go to war with Iran, because the consequences would be devastating. I mean, the US is not equipped to go to war with Iran. People think you park aircraft carriers in the Mediterranean, that somehow they pose the threat. In what capacity? I mean, Iran has hypersonics. It can just, in 10 minutes, it could wipe out the entire fleet. The US knows this. The fleet was put there not to go to war with Iran. It was to deter the likes of Hezbollah, you know, opening a second, third front in this war. So it wasn't just a war between Israel and Hamas. I mean, and people are, of course, I mean, go to me, well, you're always very critical of the US. Yes, I am, by and large. But this is a very different situation. The US will have to, by definition, continue to arm the Israelis. It will have to sit there and not publicly criticize them for the Gaza offensive, which is clearly, there's war crimes and genocide going on. People can decide to defend the Israeli conduct however they want, but that's absolutely clear that that's the case. But the US, on the other hand, doesn't want an escalation. It doesn't want a second, third, fourth front, because it knows that the whole of the Middle East could end up in a serious war. And it also knows it no longer has the support of the Saudis and the Qataris and the UAE like it once did, because the US is a diminishing global power, as we know, and hence why the Middle Eastern countries adopting multipolarity. They're very supportive of Russia and China, and the Saudis have had rapprochement with the Iranians, etc., all the things we've discussed previously. Problem is, there is a risk of this confrontation escalating. Israel wants it to happen because it thinks then the US will be forced to enter it militarily, which is a big gamble on their behalf. And there's absolutely no guarantee that would happen. The situation in Gaza itself, of course, there's always propaganda on all sides, but the reality is the Israelis are struggling to defeat Hamas. The US is telling them, look, the optics are horrendous. You are going to have to de-escalate the intensity of the war, because they're getting huge backlash, not just from the Middle East or West Asia, but also European allies are going, we can't defend this war anymore. It's indefensible. And this is why you hear statements even coming out from the UN or EU officials. I mean, I think Borrell came out the other day and went, well, we're going to have to admit that the origins of Hamas was the Israelis funded it. And this is way back, and people still think they fund it now. No, they don't. We're talking about the Arafat days. This is a long time ago. But, they're getting to the point where the optics are so bad, and more people are seeing reality. And they had some non-binding EU votes about, needing to have a ceasefire to prevent the war. And EU countries are voting for it. En masse, okay, there are some exceptions, and there are abstentions. But the abstentions are basically nations like Germany going, well, we can't vote for this, but we actually agree with it. We just, it's just political nonsense. So how long does this war carry on? And, the problem is the US is caught between a rock and a hard place, because the Israeli lobby largely controls Congress, and all these people in Congress going, well, if I'm not seen to be supportive of Israel, then my donors will disappear, and et cetera, and however else Congress is financed in all the corrupt ways that it is. So they're just self-preservation. But the US looks at this and going, well, we can't have this escalating. And this is why, we had the situation with the Houthis, who then started attacking US ships, and whether they were civilian or military. And the US tried to form this alliance of countries. We're going to stick it to the Houthis. And they all went, no, we're not doing it. Push came to pull, they all backed off and went, we don't want to get involved. I think the Netherlands sent one naval officer. And then, of course, they had the strikes on the Houthis, and the US was going, it's an international response, and it wasn't. It was basically the US. No one else was involved. The UK wants to get dragged in to make it look like it's tough on the world stage, because Sunak's about to suffer probably the most humiliating election defeat for the Conservative in history, even worse than the Blair era in 1997. So this is all about trying to look tough. So somehow British people think, oh, I think I'll vote for Sunak because he's tough on terrorism, or whatever people want to perceive Hamas to be, or the Houthis, or whoever. But I mean, it's just grandstanding nonsense. There was no international coalition. No one wants to get involved because they know what the ramifications will be. And the problem is, though, if you close the Red Sea, then you're going to see inflationary problems, because traffic traveling through there is the cost will exponentially rise because of the risk, insurance. Also, a lot of shipments are now having to go via South Africa, so you're going to substantially increase the shipment cost. A lot of oil and gas, particularly gas, is non-existent going through the Red Sea now, and oil's diminished by about 50%, and it's probably likely to rise. This is going to have huge economic problems, particularly for Europe. Ironically, Europe's always like they're not even the meat in the sandwich. They're like, whenever there's a problem, they're just beaten with this proverbial stick repeatedly. Like what happened in Ukraine with sanctions, the same problem. This is a very different situation. We're starting to see more and more public acknowledgement where people are going, we can't support this. And the US knows that, whilst on the one hand, and people don't seem to grasp that, of course they're going to support Israel, but it doesn't mean they want an escalation. People think in very binary terms that this means this, and it doesn't. It's a very complicated, very fluid situation. It's like within Israel. Yeah, Netanyahu doesn't want a two-state solution. He wants the war to carry on until Hamas is gone, and arguably all the Palestinians leave Gaza and in fact leave the West Bank. They all just go to some other country like Egypt, and then we control all of Israel. But there are people inside Israel who profusely disagree with this and know that it's not the answer. And of course, Israel is suffering huge isolation in the process, and the US is trying to concoct some kind of peace agreement, and it's falling on deaf ears. And people will go, well, that's all optics. Well, it is partly, but it isn't. The US needs this situation in the Middle East like a hole in the head because it's still trying to deal with Ukraine. It's trying to deal with the fact of the problems now in the Middle East. There's the whole issue with China and Taiwan, which for now is like it's not a problem anymore because the US can only focus on one thing, can't multitask. And then there's domestically, what's going on with the US elections is Trump. I mean, Trump's almost certainly going to be the Republican nominee. And in reality, he's going to trounce Biden in an election. Almost certain. So now they're panicking, going, well, what can we do about this? Because they don't want Trump back in office. Because, I mean, as much as he promised much in his 4 years previously and delivered very little for a whole bunch of reasons, they're now fearful, well, maybe this time he actually will deliver something. And the US has all the internal problems with de-dollarization and its waning influence in the world and its huge economic financial problems. So the timing of what's happened in the Middle East with Hamas is just disastrous for the US. And this is the thing people aren't grasping particularly well, and they're buying into all these very binary thinking conspiracy ideas that, there's all part of a grander plan, and Hamas only did this because, and the Israelis let them do it deliberately, which they didn't. They got caught with their pants down because they were arrogant and ignorant and didn't think Hamas would pose any threat. And of course, they made the fatal mistake of going, well, politically, we have no choice but to go in tough and hard. The flip side to this is Netanyahu is fighting for his political future because, without this war, effectively, the argument is, he's already deeply unpopular because the people believe, how did he let this happen in the first place? And if he's out of office, then there's all this pending trial and, hey, you're innocent until proven guilty, but, he's got the cover of being the prime minister, and that is basically why he wants this to carry on and has no intention of wanting this to end because he's just trying to look after his own interests, despite the obvious broader ramifications. And you could talk for hours and hours about this, but that's broad basically what's going on there. As I said, with China and Taiwan, there's nothing really happening. In fact, the US is almost trying to be conciliatory toward China because it doesn't, even though China's got no intention of starting a war with Taiwan, they think, well, we look weak, so maybe China will do it now. And if China opens up a front there, we can't. What are they going to do? Move everything out to the Middle East and stick them in Taiwan? I mean, it's not going to happen. So they're deeply fearful. They're trying to pacify the Chinese because they can't open up multiple fronts. And they're also worried about North Korea because North Korea knows the US is weak and vulnerable. So they're kind of flexing their muscles in a way just to sharpen minds in Washington, because they know, obviously, the North Koreans have the support of the Chinese and the Russians. This is a statement of the fact. It's not conjecture. So the US has multiple problems to worry about. And then, of course, there's all the broader financial problems in the West, and economies are in serious contraction, and the deeper political worries that populist governments can come into power. Okay, the Netherlands is undecided. There's no real government at this point, but Germany is a big concern because the AfD is increasingly gaining popularity, and there was some mutterings about maybe we should try and ban the AfD, as though that's going to carry any water in reality. But the point is, it shows the fear because they're worried about populist governments going, let's leave the EU, let's leave NATO, and let's have rapprochement with Russia. So this is why we have all this sudden escalation in nonsensical NATO talk about, well, we might go to war with Russia in 20 years. No, you won't. You're not going to go to war with Russia because that's World War III, and no one wants World War III. But this is just to keep justifying in the minds of the people, well, if you vote for the AfD and they want rapprochement with Russia, you can't trust Russia because they're the bogeyman. So let's convince you all they're the bogeyman so you won't vote for the AfD in Germany. because they're going to want rapprochement. They'll leave NATO. Oh, look, you can't leave NATO because then Germany's vulnerable to the Russians apparently invading somehow, which of course is just nonsense. Russia would never invade Germany, never goes to war with Germany. It's just the propaganda to try and convince people, you have to stick with us. You trust us because we're looking after your best interests, where people are going, we know you're not. We know you're just engineering wars and you just want to create this impression. Why? Because the military-industrial complex wants to continue to sell arms, even though, of course, it's basically running out of arms because of the Ukraine war. And also, a lot of these Western arms manufacturers, the Ukraine war has proven how useless these weapons are. And we've spoken about that previously and said that was always the case. And here we are, they are useless. All the weapons they've supplied have just been, it's like this is the next game changer. And every game changer has failed to change anything, except it's just accelerated the demise of the war from the West perspective and leading to the inevitable conclusion that however they want to spin it, Russia will win the war.
Well, that's a fascinating, as you say, 30,000-foot view on the situation. So grounding it then within the resource discussion to a certain degree, if we can, it seems to me like if we look at Russia, they're the largest supplier of commodities on the planet, one of the largest. You look at what's going on in the Middle East, oil out there. I mean, Saudi Arabia seems to be playing both sides, but it seems to me when we kind of take a step back here, even looking at Africa, right, in the Sahel, it seems that the resources, even China with the lithium battery, EV battery supply chain, it seems like, in this loose alliances that seem to be growing of kind of the West and Europe, what you sometimes call the Atlanticist, or let's call it capital W, the West on one side and the global South on the other. It seems like the global South has not all, Canada has a lot of resources, but there is a significant amount of resource production that's coming from what I'd loosely call the global South. How do you see resources factoring into, say, Russia winning the war in Ukraine, the issues with Taiwan, the Middle East? How do you see resources factoring into this very large, big picture discussion?
It's a great question, and actually we can integrate this really nicely, because if you look at what's happened with the Ukraine war, I mean, the West perspective is, we'll crush Russia in weeks. Its economy will collapse, its financial system will collapse, and Putin will be gone, and then it'll all be business as usual, and multipolarity will be dead because China won't do it on its own. Of course, what they fail to understand is, yes, Russia has an enormous resource base, so it always has access. I mean, it's not going to charge itself, sort of like spot price for energy. It produces energy dirt cheap, so it's great for the Russian economy. It was great for the Russian war effort. They have food security. They've actually rotated a lot of the internal markets, so they're becoming totally independent of the West, and they produce a lot more goods domestically, but they have access to this enormous resource base, which means they can fight this war for 5 more years, 10 more years, easily. The West couldn't fight the war for another 10 minutes. And so, they have this enormous resource base, and they've hardly scratched the surface in terms of the resources that they have. Probably 65, 70% of their resource base is still in the ground and has been explored. And this isn't just oil and gas. People think Russia's economy depends on oil and gas. Increasingly, absolutely not. It's rotating its economy. It's not only changed its internal market, where it produces a lot more goods, but also, of course, it's now developing relations increasingly with the global South, where we want your energy, and in return, you'll give us these resources, or, manufactured goods, although, of course, that's changing, as I said, because Russia's manufacturing a lot more goods internally, because it intelligently understands that's the way forward for them. But in a broader sense, China's producing more energy now. It keeps finding, I think recently it's announced a discovery of 1 million tons of lithium in a mine. I think it was tons. Maybe I'm wrong, but I'm pretty sure it was. And, this is kind of the future where The global south is going, we have all the resources. I mean, you make a point about the Sahel region in Africa, and it's a great example where we had colonialism for hundreds of years. Then we had neocolonialism where Western nations like the French were just exploiting the resources, giving crumbs to the African nation and taking all the profit from resource extraction. Now they're kicking the West out, they're kicking the Americans out, the French and whoever else. And they're going to the Russians, the Chinese. We have all these resources. We'd like your expertise and your investment. It's a win-win. And now the African nations can get a lot more sort of bang for their buck, so to speak. They will be able to make huge amounts more revenue from their resources. They're going to have internal markets developed so they can produce resources and take those resources and produce finished goods, which they can then sell to the world. So it's hugely beneficial. And this is why the future is about resources. And you're absolutely right. The West isn't entirely devoid of resources. Canada is a good example of that. But when you look at the more global picture, the global South has everything it needs. And if the countries like in Africa and other parts of the world are able to in inverted commas, exploit their own resources for their own benefit, and yeah, it's win-win. Of course, the Chinese and the Russians benefit as well. No one's doubt. But instead of getting a cent on the dollar, and they now get 70 cents on the dollar for what they produce, and the Russians, the Chinese get 30%, and everyone's very happy. And that's the big mind shift that's happening, or the whole mindset is changing. And it is the future. It's about resources, because technologically, whether people like new technology or not, that there's a whole conspiracy nonsense about that. I mean, yeah, there are some reservations about things for sure, but the future's about technology, and you're going to need resources to make that technology. And the West, as Germany's sadly finding out, without the access to cheap Russian energy, can buy energy from 3, 4, 5, whatever times the cost elsewhere. But in the process, it's deindustrializing, and now it's trying to go, well, we want this new technology. We want to encourage investment. They're literally having to pay sweeteners or, to get businesses to come and invest. Going, well, if you build a plant, we'll give you these massive subsidies to come and build plants. And what are they going to have to do? Subsidize the prices as well, because here's the point. They can manufacture things, but if it still comes back, they still have the expensive energy. So if it costs 3, 4 times, 5 times to make a widget, so to speak, in Germany, and you can buy those widgets from the Africans, Chinese, the Russians, or whoever else, the Iranians, whatever, you're going to go and buy the widgets from them. And what do? Make the widgets for their domestic market? Well, that's price inflation. You're never going to get rid of the inflationary cost, because if your widget costs 5 times as much and then you sell it into the market domestically, well, that means whatever that widget's used for is going to cost 5 times more. So this is not the way forward. So it is the future. It is about access to resources. And the point is, if nations can also go, well, we have a thriving domestic market for whatever resource, then we can start to price that resource in local currencies. Maybe in the future we're part of the BRICS and we price these currencies in a BRICS currency, and we all sell it to each other. And we have our own control of our own markets. The price is not dependent on the West trying to manipulate the price, be it hike the price or smash the price, as they've been trying to do with oil. I mean, look at oil. Oil's a great example. Given everything that's been going on in West Asia, oil should be over $100. And it's not, because the West is constantly trying to smash it. Why? Because the US wants to buy cheap oil and keep the price down, which is trying to beat up OPEC and OPEC Plus, which includes Russia, of course, turn around and said to them, go away. I'm not interested. You don't figure in our thinking. We'll do what we want, which is in our interest and not yours. So the consequence of all this is, it's very much he who has the resources, or whoever nations have the resources in the global South, have way more resources. And they have the thriving vertical markets. They have the markets where there is huge growth potential, whereas we in the West, as we know, have reached saturation through because of inflationary problems, because of irresponsible monetary policy with QE, zero interest rate policy, fiscal policy, We've reached the end of the line. We're now having to subsidize everything just to stay alive. And in inverted commas, and that's unsustainable. As the Netherlands are now admitting, well, we can't have all these subsidies anymore, but if we stop them, we're going to have millions of people rioting, and if you remove the subsidies on mortgages in the Netherlands, millions of people wouldn't be able to afford to live. But you can't, it's not sustainable. So we've reached the point where, an inflection point where nothing's sustainable. The global south has all this vertical growth room for the next 50, 100 years, whatever it might be. And therefore, that's where the future is. And if you have investment, they don't want investment from the West because they don't trust the West. So they want investment from friendly nations who won't try and screw them out. And therefore, here's the point. If you're going to have resources like in Africa and you want to extract those resources and add value by producing goods, you're going to need roads and railways and bridges and dams and all these things. Who's going to finance that? The Chinese. Chinese come in and go, we'll build all the infrastructure for you. And in return, this is what we get in return from this investment. And everyone's very happy with this. Whereas the West, well, what can we produce anymore? How are we going to be economically, financially viable, even if we have access to resources, which increasingly we don't, and we're highly vulnerable to, for example, closing the Red Sea, or saying, ironically, the Houthis are going, Russia, China, all your vessels can go straight through, no problem. The United States and UK, well, no, sorry, you're a target. Okay, well, we're not going to go through the Red Sea. We'll have to go around, as we said, South Africa. But this is the problem we're facing. And we need to start to accept the fact. We just need to stop trying to create confrontation in the world, stop trying to have a war, start to build trust. And there's an interesting dynamic, actually, worth mentioning with regards to the French who've been effectively kicked out of the Sahel region. They actually, the French ambassador to Russia actually went to the Russians and went, would you be interested in developing some joint projects with us, the French, in that region to improve our, the optics and our credibility and trust in us? Because they're basically being kicked out. Of course, the Russians won't get lost. Go away. We don't trust you. We're not going to tell the Africans to trust you because you're working with us. And meanwhile, you're still sanctioning us with respect to Ukraine, and you're making all these outrageous statements, but that's the desperation. And the French, without access to all this cheap resources, they're going to have to get the resources at infinitely greater cost, which creates price inflation. And it's unsustainable. The West has reached the end of the line. There's no growth. We've saturated the debt markets. We've saturated people's salaries. You can't pay them anymore. But then in the next breath, we're going, well, we're going to have to pay more for everything. In the long term, that creates huge price inflation. People want higher wages that we can't afford to pay them. And therefore, we destroy the productivity capability anyway. And offering anybody subsidies to come and build a factory in your country is not the answer. In fact, you're just deceiving yourself that we face the end of the line. We have to completely rethink, completely remodel our financial system and realize we are then going to have to be subservient in inverted commas to the global south and those nations and go, okay, how can we build trust with you? How can we work with you? We're going to have to rethink our whole strategy. And it is all revolves around resources, because resources have never been more important now than at any point. I would argue, even going back to the Industrial Revolution, because, yeah, you need your resources, but we've exhausted a whole bunch of resources since that time. It's a very different situation now. And this applies to everything, whether it's food, whether, it could be, oil and gas, it could be renewables, whether you agree with it or disagree with it. And it can relate to copper, it can relate to steel production, iron ore, everything. There is a need for resources, and it's diminishing in the world. Well, from the West perspective, but go to China, it keeps discovering new resources, and so do the Russians. And there's enormous resource potential in the Arctic region where Russia has control. And, so the West going, hang on, we need to rethink our strategy. They just keep doubling down, but privately, you can see the fears written all over their faces. And they know the writing's on the wall. They know the world's changing. But the problem is, instead of accepting reality, they're just making things infinitely worse. And The resource war, in inverted commas, is eloquently highlighted by the very rapid demise of Germany, not least because they turned their back on cheap Russian energy. And if the AfD sells the line, we're going to restore Nord Stream 1 and 2, reproach them with the Russians. We're going to work out our differences. We're going to leave NATO so we don't spend hundreds of billions of euros buying pointless weapons to defend ourselves against a nation who will never invade us or attack us. And by the way, we're leaving the European Union because it's pointless, it's autocratic, and that's being polite. And the masses vote for it. That's a big selling point. And because they're giving Germany then the chance to go cheap energy, we can then become a manufacturing base again. Because Germany has great potential to be a wonderful manufacturing base. But it has to divorce itself from the idiotic policy decision of the Atlanticists, which is the great description. It has, since particularly the Ukraine war, is destroying Germany in the process and seemingly incapable of understanding that's precisely what they're doing, which is why people go, it must be deliberate. No, be far more concerned it's not deliberate. The exact opposite. There's no adjective to describe how idiotic these clowns are with their ridiculous ideas that somehow this is the future and not understanding, well, if energy costs a lot more, what does that mean for us? They can't even comprehend simple things like that.
Well, you speaking about this, say, especially with the Sahel and Russia and the French ambassador asking if they can collaborate. And of course, from Russia's point of view, why would they even want to collaborate at all? And I don't know if you saw that story. I think it was early December where Burkina Faso decided they were going to make their own gold refinery. And it was the Russians. The Russians were going to help them. And what it speaks to me is to this idea that resources from the Russian and I'd argue the Chinese perspective as a kind of, if we were to loosely call it an axis of sorts, contradistinction to the Americans, it seems to be that resources are really front and center of their strategy here. And I think in that small story in Burkina Faso where you see, to me, that was an extremely significant story. It's like, look at what Russia's doing. Like it reveals they're saying, process your resources yourself and we're going to help you do it. And as a larger, and I think the story that the Russians and the Chinese tell themselves, as well as probably their allies, is this is a decolonization drive. This is we're just trying to get the yoke off of you, which is a very seductive narrative. And resources is how we're going to do it from the strategic point of view. What do you think of that?
Oh, absolutely. I mean, that's what you make a great point with the gold refinery. But let's look at this historically. What would have happened is no investment from the West, or very little, or as much as was needed. Well, I mean, let's just do some simple maths. If going forward, Burkina Faso can sell an ounce of gold, okay, excluding production costs, but it can sell an ounce of gold for $2,000 an ounce, for argument's sake. And maybe it costs them $1,000 an ounce all in costs to produce an ounce. I'm just plucking figures. It might be cheaper. It could be a bit more expensive. But, for argument's sake, they can make $1,000 an ounce profit. Previously, because of the neo-colonial situation, they were maybe making $50 an ounce. I mean, it's a no-brainer for them. Because here's the thing, they can start to reap the benefits of their own resource capability. That improves the whole situation of the economy of African nations. And, it's an enticing model when African nations go, well, here's the thing, we can exploit our own resources. It's hugely beneficial to our own economy, our own financial system. And here's the nice kicker with this. They're all signing military cooperation agreements with the Russians because the Russia will come in and go, we'll protect you. We'll put forces in. So, because Burkina Faso, I think every week there's a coup attempt to try and remove the leadership, instigated by the West, of course. So the argument is, we'll provide you the security, the muscle to protect you as a nation, and you can begin to exploit your resources, and therefore you can grow your economy, and then, the whole region becomes vibrant, and then they can all work with each other, and and develop the infrastructure. And, and it becomes that they have the African continent can have its own enormous internal market, which will be in the sense of de-dollarized. It will have its own payment system, and they already have these things in development, and they have their own ecosystem. Yeah, they can sell to the rest of the world, but they can integrate into whatever organizations they want to, as well as having that big, huge internal market. I mean, it's just a no-brainer. And the other thing is, if you trade in local currencies, they can smash your currency against the dollar, but no one cares, because all the currencies get smashed against the dollar. This is an intentional move to try and force these nations back into the dollar-denominated world, and it's failing. And they go, well, we're not having price inflation now because we're selling stuff to each other in local currencies. And people haven't grasped how important that is and why it's hugely significant and hugely beneficial to these countries. So, they can finally look at this. This is why they're having the confidence to kick colonial powers out of countries like the French and saying, get lost, you're finished, go away. And of course, the French are looking at this going, well, we've been screwing these nations over royally for however long they've been doing it. And without them, we're screwed. So it has the beneficial effect for the African countries, but also the flip side. This is nations like France are in serious trouble because this is going to affect their economy. It's going to affect their budget, and because all the money they were creaming out of Africa, and they're not making it. So then they have massive budget deficit because, again, the West reached the end of the line. It cannot finance anything anymore. So it's a double whammy effect. It helps the global South nations enormously, but also the consequences for colonial powers is devastating. And rightly so. It's about time. How do you describe them? There's no adjective. They're just kicked out these countries. Stop exploiting them. The West stops putting dictators in who are just sympathetic, and to the West, allow the West to do whatever they like and don't give a damn. And I'm not one for advocating regime change, but a lot of these governments that have come in, military governments that have had coups and thrown Western sympathetic leaders out, are actually looking far more better intentions towards a future for their people. And the West can do nothing. The US cannot do anything about this. And because, it's all well and good having a coup in one country to deal with one problematic nation. But if you have 20, 30 countries in Africa are all problematic, what are you going to do? Have regime change in every country? It's not going to work. So this is why increasingly all these coups don't work, and because the US is stretched, is so weak and vulnerable itself. And all these attempts to try and, like the Ukraine war, was all about trying to destroy multipolarity and de-dollarization. And it comes back to the point, they raised interest rates that have nothing to do with inflation. It was all to do with trying to force the world back onto the dollar. And it's failed. And they're sat there going, how the hell have we raised interest rates this high, crippled all these currencies in the emerging markets, and yet they're all managing to cope all right. They're managing to cope okay, because they've de-dollarized. And they're working on markets where we don't interact. We don't sell this price. We negotiate with each other, and therefore we smooth out the fact our currency is being intentionally destroyed against the dollar. And we've realized, hey, this is wonderfully beneficial to us. So your point, absolutely, with Burkina Faso and gold production and putting gold mining in, and it's one thing if they sell just doré, but they refine the gold, then they can use that gold in maybe other manufacturing processes, because gold is used industrial as well, not the same way as silver, but it is. Then you have value-added production, which is great for their economy. So, it's one of these staggering things. I've spent years telling people in African nations, this is how you need to do things. And finally, it's happening. And, from their perspective, Africa in the next 10, 20, 30 years will become this hugely vibrant continent. It's a long process, but at some point, Africa, for me, will be the largest economies in the world. But, and that's not a problem. China doesn't care about this. It's not a competition to be the biggest. It's about what benefits us as a nation state? How can we improve, the worth of people? How do we sustain people economically, improve their livelihood? And it also comes back to this point. Everyone's going about, well, China's population decreased by 2 million. In a world of increasing automation, China doesn't need to grow its population. Economies are not going to be dependent on ever increasing populations for more and more consumption, and that's the only way to grow your economy. Absolutely not. And in fact, I'm not saying it should be the case, but if China's population was 20, 30% less, it wouldn't reduce its economic output at all. This is just a statement of fact that we live in a world that's very different now, and having to have ever-growing populations isn't the answer. Okay, there are certain issues with population decreasing because the idea is those who've retired have to be paid by those who are working, but we're talking about a situation where we're going through this enormous revolution where in every country in the West, 50, 60% of jobs will cease to exist anyway. So what are these people going to do instead? These are enormous challenges, and the idea we need an ever-growing population to resolve our economic woes is not any more applicable. I'm not saying population shouldn't grow. I'm just saying it's not a prerequisite. So all this kind of focus that China's finished because its population is not exponentially growing is just deluded Western myth they're always desperate to believe China's failing. Rather like when its stock market goes down, China's failing. It'll be like China has a 5.2% economic growth in 2023. And they're talking about that, they're collapsing and it's over. Because we're focused on financialization. China's focused on the real economy where you produce stuff and sell it and make a profit. And we don't think like that in the West at all. And that's why it's that part of that delusional mindset that if our stock market's at an all-time high, everything's great, which of course is a nonsense.
Discussing, Africa and the Sahel, and I was thinking about Niger and the uranium and how, as you were mentioning, France gets a lot of its resources and uranium from Niger. And I was thinking, in its own way, it's kind of an analogous situation to the Russia-Germany problem, because now, like, uranium, last I checked, was in the high 90s, may have even broken $100 a pound. And all of a sudden, with France, I can't remember the numbers, at 60 or 80% of their energy coming from nuclear power, their energy, maybe they have huge stockpiles. I imagine they do of uranium, so maybe it's not urgent. But if uranium prices stay high, let's say for the next 5 or 6 years, their golden goose, so to speak, out of Niger has been cut off, as far as I understand. I mean, they also face a similar issue with their energy that Germany does, like maybe not at the same level, but it does seem like an analogous situation. What do you think?
Oh, absolutely. Yeah. I mean, you may, nitrogen uranium is a great example. I don't think France actually has the stockpiles that we necessarily think they do. I think a lot of that exploitation was then selling it, to the rest of the world because they're trying to balance their books in terms of their budget. So, yeah, it's absolutely true. And you can apply this to any resource in the world. I mean, whether you agree with renewables or not, the bottom line with the whole renewable situation is there's going to be resources we need. And increasingly, those resources are diminishing. So like silver is going to be a problem. And we're going to massive more increase in production, a lack of silver resources. Where are the resources anyway? Largely in the global south. And there comes a point, and this is the predicament the West faces, if in the future, the West can price uranium at whatever it wants to. But the bottom line is these nations will go, we're not pricing it in dollars and we're not pricing it in Western markets. We're going to price it ourselves. And, and we are going to sell to the friendly nations at, I don't know, whatever price per pound for uranium. But for you, the West, it's double the price. Welcome to the new colonialism in reverse. And this is the point. They will just dictate the price. I mean, it's like Russia sells energy to whoever it wants at whatever price. I mean, all this spot price nonsense is, they don't price energy in those terms. This is why all this stuff, I mean, all these prices in Brent WTI are for oil. is so the United States can then go out and go, we want to pay this price in dollars for oil. And they're not even going to get it at that price. So it's this situation where, yes, very much it's a question of he who has the resources, and the West is going to, how long is it going to take for the African nations to trust the West? I mean, it's going to take a very long time. And then there's no guarantees of if you cooperate with them, the West, this is going to make a scrap of difference. At some point, they may just decide to try and overthrow another government or instigate a war or whatever they want to do. And therefore the trust's gone, and the West will pay an enormous price because of its behavior and its outrageous treatment of these people.
So as we're wrapping up here, because we're going on an hour here, another kind of side to this story, I don't know if you've been seeing these stories on deep sea mining, but we've seen Norway make inroads on deep sea mining. And we've also seen, I don't know if you saw that story where the U.S. extended, I don't know if you'd call it their continental shelf,
yes.
unilaterally, right? Where it's just like way out, if you look on the map, and also north of Alaska, like a huge amount. And I think it speaks to this whole discussion of like, all of a sudden deep sea mining, to me, it's sort of like, for lack of a better term, a kind of desperate measure. Like it seems to be a sign a little bit, right? Because it's like, where do you go? I mean, where are you going to mine in Europe? And it's almost impossible to open a mine these days with all of the regulation, or it takes a long time, even in Canada, right? And that's kind of an issue they're trying to fix, but it's still an ongoing issue. And deep sea mining to me seems like they're literally running out of places to look. So let's go underwater. And this seems maybe it's not a bad idea, and maybe we'll save our hide that way to a certain degree. Is that your impression as well?
Yeah, it's total desperation. I mean, here's the thing. The US likes to tell the world, we're the biggest energy producer. We produce more oil and gas than any other nation. Well, if that were true, why are you reaching desperate measures to just unilaterally go, well, we've extended our waters by enormous amount of distance? I mean, you talk about criticizing China and the South China Sea and putting islands where they shouldn't. Well, the US is doing this because they're desperate, because they don't have the energy that they like to convince the world they have. They don't have this bottomless pit of oil and gas. And the desperation has to be factored in that they're also going, we're going to be in the future. We know we're going to be, the global South nations are not going to want to trade with us. And they're not going to give us all energy. They're going to sell energy to other global South nations, a friendly nation. They're all going to work together and cooperate. So we need an alternative. But here's the problem. Extending your continental shelf is no guarantee. I mean, people think that just means, there's all these assets, deep sea, drilling operations. It's all guaranteed. It's in the ground and we just get it out the ground and everyone's happy. They don't even know it exists. It might not exist in economic terms. I mean, yes, deep sea mining is improving. I mean, mining techniques are a lot better than they used to be and costs are being reduced. But back to this point, if your energy supply for the United States is diminishing and you're having to buy energy on the open market, and, you need lots of energy to get energy out of the ground. I mean, so it's a huge problem, and they're just speculating, guessing, and they're trying to convince everyone, we don't need Russian energy. We've got all these resources. Okay, yeah, Norway can make these statements, but let's see some feasibility and viability plans that's going to say, well, if we extract oil from this, how much is it going to cost to get it out the ground? I mean, hello, Iran can manufacture a barrel of oil, produce a barrel of oil for about $5 a barrel, literally. It costs nothing. How are we going to compete with these nations? Whereas how much is it going to cost us? We don't know. Is it going to cost us $70, $80 a barrel to get it out the ground? It's all about economic viability and who's going to finance all these operations. Who's going to take the big hit that we spend tons of money and then find it's not economically viable? And in the process, we're also telling all these companies, you have to defossilize, you have to embrace the new green revolution. What they're also telegraphing is the green revolution's a total lie, and they all know it's a lie, which is why they go to COP and make all these grandiose statements. Then they all go home and go, well, we're not doing that. No, we'll do it 50 years, I don't know, 100 years, or maybe just never. Let's talk about it and go home and do nothing. because they know it's not viable. They know it's just totally unfeasible to try and exploit a limited resource and which you consume a lot of that resource in the process. Not feasible. So yeah, it is desperation because they've suddenly realized, oh heck, Iran could produce 5-10 million barrels a day of oil easily and sell it to the world dirt cheap and make a huge profit. And they're panicking, going, well, hang on a minute. If that happens, what does that mean for us? I mean, because privately they want cheap cheap Iranian energy, and Iran's going, you've got to be joking. All you've done for 40 plus years is try and overthrow our government. You're trying to destabilize our country. You're trying to get us involved in wars, which you did. Iran-Iraq war is one example, et cetera, et cetera. We don't trust you. So yeah, it's just total desperation and with no guarantee of any success. And I think rather like the US exaggerates everything, I think you'll find that shale oil and gas reserves are nowhere near what they like to make it out to be. And, a lot of big companies got burnt by throwing loads of money at that and getting no return. There's no appetite to enter those markets and put huge amounts of capital expenditure with no guarantee of any resolution. And if you start then going, we're going to mine offshore, where are you going to mine? And to exploit potential reserves you think might exist. I mean, whereas the Russians and all these other the Iranians, etc., have enormous proven reserves. I mean, Russia could probably provide the entire world's oil production for the next 200 years just on its own. And this is what the West facing. I mean, it's like you'd be sat there now going, I think we ought to make friends with them. Let's just stop doing it. But they won't. So they'd rather just keep digging a hole for themselves and thinking that somehow they can dig their way out of it. But if someone gives you a spade, don't keep digging, because all you'll do is dig a hole so deep you can't get out of it. And that's part of it's total desperation. I mean, we're not saying it's not feasible, but it's a huge gamble with no guarantee of success, and rather like this big plan that we're offering an alternative to the Chinese Belt and Road, and we'll have some preliminary plans out soon, and it was all going to involve the Indians and the Saudis and the Jordanians, and it was all, no one's heard anything. You know why? Because it's just not even going to happen. Because everyone knows it's ludicrous and it's completely unviable to do it. But this is the US just desperately trying to say to the world, don't join multipolarity. Be with us. You can trust us. We're the future. And they're all looking at the US and the UK and its allies going, you've got to be joking. We don't trust you. You aren't the future. You're a leopard and you can't change your spots. We all know this. And that's the dilemma the West faced. So trying to go offshore and find energy reserves is just trying to fool yourself, fool your people, fool the world, and the world's going, we're not being fooled anymore by this.
Well, that Belt and Road alternative was a headline that it came and it went. I never heard about that. I don't know if you saw another story about it, but it literally was a kind of a feel-good headline for 2 days, and you just never saw it again. Paul from the Sirius Report, thank you for joining us once again on the Northern Miner podcast and sharing your perspective.
Well, thank you for having me on as well. Much appreciated.
Thank you once again to Paul from the Sirius Report for sharing his very interesting perspective and insights on what is happening in the world. Also, a big thank you to FM Global for sponsoring this week's episode and sharing a very interesting view on risks at the mine site. And thank you, dear listener, for joining us once again on this very interesting journey. We have a fabulous guest next week, if everything goes according to plan, John Gorman from the Canadian Nuclear Association. It should be fascinating to hear what he has to say. Nuclear energy people are in very heavy demand right now, so it was great for John to come on. Until next time, if you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.